Welcome to Tradier's The Trader's Edge podcast. I am Jim Uriel. That's Bob Iacchino. Bobby. So, for a year and a half, I've been talking about the eventuality of these long end auctions going bad. Yesterday, 5-year auction went poorly. Today, 7-year auction went poorly. Today, the 7-year auction went poorly. Rates went up again. I think that it is beginning to happen, and I think this is an enormous deal that the world is telling us, yes, it's still U.S. Treasury debt. We still want it. We just don't want it as much as we wanted it before. Big deal, little deal, no deal.
Big deal. And I think, one of the things we always look at is equities, right? Everybody always looks at equities. And you and I try to talk around equities as much as possible because everybody's talking equities. But when you look at this particular, like the earnings scorecard we have so far, right? 96% of S&P 500 companies have reported actual earnings, not estimates, but actual earnings. 78% beat on EPS, 61% beat on revenue. That's not atypical. We all know the exercise of lowering the bar and then jumping over it, right?
So you beat them, right? Yes.
Yeah, well, they've participated in a little of that too. We only had 100 companies report guidance. 60 were negative, 40 were positive. I may be off by 1 or 2 on that. And then the blended earnings growth rate so far is 6%. That's the strongest since Q1 of 2022. But that Q1 number in 2022 was 9.6%. So like 40% higher than the one we're getting this time. So equities are always the last to notice what you're pointing out, that we may have struggles ahead of us.
Sure. And even if the struggles may eventually be good for the stocks, they don't like unsettling events where there's multiple outcomes. So I think stocks might have a difficult time in the near term. But I do like the same metals trade I've been talking about for a year and a half.
So let me ask you a quick question.
Go. Yeah.
I'm long and I'm struggling with it psychologically. You have any advice for me?
Yeah.
What's that?
Hedge it. Well, it should have hedged it 3 days ago because VIX has spiked quite a bit too. But now when you change your hedging strategy, when you want to sleep at night, it used to be if VIX is trading at next to nothing, you buy some puts. If VIX has popped up and now the volatilities, you buy put spreads and you pick yourself where you want to buy it. And I'm going to do that too because I have a large put position. Now volatility is spiking up. I am going to sell then a lower strike put that indicates where I want to pick it up.
So that's what I'm going to do,
and I think that helps you. I don't think it's too late to buy put spreads. Take advantage of the skew bumping out. You know what I mean? Some of those further out deferred puts are going to be more expensive. So I think you could get good deals with the vol spike. Anyway, on to our guest. Bobby and I have said it a million times. I'm going to say it again. I don't care about repeating myself. My mom repeated herself every day for the last 20 years of her life, and we all still laugh at her jokes. So I'm going to repeat it again. You may watch Bobby and I, and you think that our opinions are crap and that we're full of crap, but you cannot argue that we get great guests. And today is no exception. We have Denise Shull, the founder of the Rethink Group. She is a trading psychologist, which is something I need. So I'm going to lay down on the couch and start asking questions of how she can fix me. So without further ado, let's bring in Denise. Denise, how are you?
Hey, I'm well. How are you guys?
Good. Good to see you.
To have you. So something that I want to start the show with too, and I used to be at CNBC, and I was at CNBC for 15 years before it exploded spectacularly, which I will tell you that story offline. I think you'd love it. But one of the reasons I never turned on Billions is because that just soft dish rag milquetoast, Andrew Ross Sorkin, who I didn't like him and he didn't like me. And the funny thing is, like, he didn't like me because we weren't, but guys like Bobby and I aren't the New York upper crust. Now, the only reason I bring this up is because I think completely that you were wronged by that whole institution, and I didn't watch that show either. Do you want to talk about that? Do you like to talk about that or no?
I don't mind talking about it. Talking about it
people would
gives me
find it interesting because it
gives me some opportunity to tell the truth,
So just talking about it because I don't watch it either, and I haven't been following your story on it.
Do you know what I'm referring to, Bobby?
I do. I've seen.
The character in Billions, who was the psychologist, who I watched a couple episodes, was patterned after Denise. And, people knew it. People within the finance industry knew it. And then they kind of washed their hands of her. And, well, you tell it, Denise. Take it from there.
Well, okay. So, morning, like, stop me because I can't get on this topic and go a little nuts.
We like a good rant.
Yeah. So I'll try the short version. The short version is Andrew, who had interviewed me in 2012. And I didn't know he was actually writing the pilot at that time. I mean, I met him on the set, right? But he contacted me in 2015 and asked me to do him a favor, which was meet with the actress in this drama he was involved in. So I didn't know anything about it. I look it up. I see what it is. I'm assuming that I'm going to have like a glass of wine with this woman and, chit chat a little bit about this role. That was a bait and switch, and they knew it. Like, basically, without going into all the details, the next thing I know, I'm in the writer's room with the main showrunners, which are Brian Koppelman and David Levien. And Maggie, the actress who needed my help, wasn't even there. Like, that was a plan. I mean, so I end up, I tell them a fair amount. I decide to cut the meeting short because I'm like, wait, I'm starting to give them too much without kind of like, where are we going with this? Mm-hmm. And Maggie didn't want me to leave because she did finally get there and she hadn't been there very much. And she starts talking about my book. And I say, because I'm embarrassed about my book being written in a fictional story, and I thought Brian Koppelman wrote Rounders. It turns out Brian Koppelman was actually for Rounders also. So like, this is a pattern. But basically I say, so just so you know, Market Mind Games is written in a fictional story. And if his head could have blown off, it would have. What do you mean? It's a self-help book. It's supposed to be trading psychology. How can it be fiction? And I'm like, and Maggie's doing the same thing. Well, she wrote this other article about interviewing at, Citadel. I'm like, so anyway, I get out of there and I'm like, what the heck happened? Well, there's all kinds of details, but to make a long story short, if you write a fictional book, you are at more exposure for copyright than if you write a self-help book. And he had already been sued for Rounders. So when I said my book's written as fiction, and I think he knew Andrew had used my book. I don't know for sure if he knew Andrew had used my book, but the first thing I do is dedicate the book to my dad in Ohio, Maggie's back bio, or Wendy's back bio. She's from Ohio. The first thing I say as a piece of advice, or are you eating, sleeping, and exercising? The first thing she says in her character in the pilot is, are you eating, sleeping, and exercising? So maybe those two things are like random, but like if you put the probabilities together, it's like 0.006 that they both could occur in the same, randomly. So Andrew had my book open, clearly. Brian's solution to it, I mean, I don't have the email that says this or the recording of the phone call, but if you put all the facts together over the next 5 years, the solution to it, Brian called Andrew and said she can never be on CNBC again. I mean, we did have a producer tell us that she couldn't put me on and she couldn't tell us why, and we did have a writer call and say everything we were saying plus more was true. And I could go on and on and on and on and on. But to go to the other end of the story, I sued them. I thought I could go into, a federal court and get something resembling a fair hearing. Ding, ding, ding. That was wrong. Exactly like the show. So a lot of things happened, but at the end of the day, I was like, wait a minute. I had a lawyer who'd argued in front of the Supreme Court these same sort of issues, had won in front of the Supreme Court. That lawyer told me I had more evidence than he'd ever seen. And every single discretionary decision in that court went against me. Every single one. They broke rules. They didn't admit they broke rules. And at the end of the day, after I lost again at the appeals court, I said, statistically, this isn't possible. Like it could have been slightly unfair or slanted. Like some things would have gone in my, like 100% go against me when a lawyer that's really skilled in this arena is won in front of the Supreme Court says you have more evidence than I've ever seen. So she now works for me, but at the time she was an intern and she can find anything. And I'm like, find the connection. And sure enough, as it turns out, they had a lawyer who was an adjunct professor at a law school. And she had one of her students working for the judge, just exactly like this.
Oh.
Wow.
In all of this, your friend Drew could have solved it. He could have. He could have
easily.
I think
Yeah.
he could have at least not agreed to eradicate my financial media exposure, but that's what he did. He tried to put me on CNBC one time to placate me, and I knew what was going on. And I'm like, Andrew, this is great. I appreciate the visit, but this doesn't solve the problem. And so he put me on and asked me about North Korea. Like, really? Like, I know anything about what's going on in North Korea? Again, just like the show, sort of set up to embarrass me.
By the way, I am not surprised even the slightest bit.
So I just wanted to throw in, this is mostly to people watching this, whether it's you're watching us live now or on a replay. CNBC is trash. They are the TMZ of financial media. They're horrible. They're useless, and you shouldn't be watching them. I was on CNBC as well, around the same time as Jim, and there was one specific time where they said, "Hey, tomorrow we're gonna have you on. We want to talk about crude oil." Fine, we'll talk about crude oil. 15 minutes before the spot, we're pivoting to copper, and we want to trade from you. Well, I hadn't looked at copper, but it turns out it was up about 7%, right? I said, well, why are we pivoting? Well, because it's up 7%. I said, okay, well, I'm not giving you a trade. I'm not trading copper up 7%. I'm either buying the high and chasing it, and I'm putting it on 7% risk for a possible 1% gain. Or I said, I'll look at it in a couple of days when it calms down. No, we need a trade. We need a trade. Fine. I go on and I say, they said, so what's your trade, Bob? I said, if copper drops 6.9%, I might buy it. And they called me up afterwards and just berated me. And I said, you know what? Go fuck yourselves. I said, I don't want to be on you. I don't want to be on anymore. I got to sleep. It's me people are seeing. And I'm not doing this anymore. I was supposed to be on through the end of the year. It was a soft contract. I said, if you guys have a cancellation, you need me, I'll come on. Stop scheduling me. I'm done with you idiots. And they just have not gotten any better. So I'm trying to tell people right now that if you watch CNBC, turn it off, turn on something else, turn on the Tradier hub, turn on something, because it's not doing you any good. They have somebody like, I think, what was his name? Kevin Vogel, the guy who started mutual funds. He's since passed away. It was Fogel.
Jack Bogle.
Yeah.
Bogle.
The person who actually originated long-only mutual funds, he died a couple of years back. He was 80-something years old. And they have him on. And then right after that, they're like, next is fast money. All Jack ever said was buy and hold. You shouldn't be trading. Next on, we have fast money. Are you guys morons? Anyway, we have a request for Denise's full name and spelling and the book name from somebody who's watching this live. So I'm going to put it in the chat. But if you want to say it while I'm doing that, Denise, spell your last name and the full name of the book.
Shull, Shull. It's Denise, my middle initial K, Shull on Twitter or X. I'm never calling it Twitter. I'm never calling it X. And the book is Market Mind Games.
Perfect.
Which another reason I apologize to Brian is because McGraw-Hill didn't like that I wrote it in a fictional envelope, so to speak. I play myself, which is what I said to him, which is what caused him to go crazy. And they didn't fix the last edit of copy. They didn't fix the last round of copy edit. So I apologize for the spelling mistakes because it embarrasses the heck out of me, but what can you do? Otherwise, it's probably a decent book.
So I do. So I want to get to okay. So when you talk to traders, what do you think the biggest problem is that they deal with? I know what my biggest problems are too. If I'm sweating things out too much, it means I have too big a position on. When I go back to smaller positions or options where my risk is defined, I can look at things more clearly. Is there something? What am I missing?
Well, the biggest problem is that people don't actually understand how they make decisions. Like, they don't actually understand the role of confidence or degrees of confidence, including fear and degrees of fear. And they don't know how to recognize that subjective, that physical experience of nervousness, let's just say, and analyze it as data to say, okay, what am I really afraid of? Like I had a conversation with a client in London yesterday. I mean, the guy's successful in markets. He could retire. He's in his 50s. But basically, he's never really gotten big in positions. And he works for the owner, the founder of that fund, who would like him and the rest of their team to get bigger. And we went through, well, really, why is that? And at its core, he has this, what we figured out was outsized, exaggerated fear of being down on the year. Like it just doesn't, he's like, once he's up on the year, he feels like he can trade well, but he is way more afraid of being down on the year than is reasonable. So what happens is, because people don't know that, like, essentially how they feel is a data set their brain is using. And like it reflects your, like there's trades that would be easy for you guys to take that wouldn't be so easy for me to take because I'm not as familiar with how they work. So I would be more like worried, nervous, concerned. That'd be reasonable because I don't have your level of trading knowledge. Well, people don't know how to understand that as data set. So they try to push it aside because also everyone tells them to push it aside. And then all that ends up happening is they literally act out the feeling. So it doesn't matter. We can talk about typical feelings. So I can go back to that first interview with Andrew on CNBC, and they asked me a version of the same question. And I said, well, it's really fear of future regret. Now, what do I mean by that? Like FOMO, we all know FOMO, fear of missing out, right? But if you dive into like, okay, what are you really afraid of missing? People will be like, well, making the money or not making the money or giving back the money. And then you say, well, what would happen if you didn't make the money, you get back the money? Like they'll go, well, I'll look stupid. I'll be embarrassed. I'll feel stupid. I'll be mad at myself. There's this like second level, how they would feel about themselves and how they would think other people, you know, particularly if they work in a team or have a boss or whatever. That's fear of future regret. I'm going to somehow feel bad about myself beyond the making or losing money. And that's actually really what influences people's decision. So when people start to become conscious of they have this fear of being mad at themselves or looking stupid or feeling stupid or somebody being mad at them, they're much more able to say, okay, well, maybe that will happen, but how much does that really have to do with this trade over here? But people don't know that that's influencing that. So let me say one more thing. What I think the best neuroscience says about perception and judgment is we're always predicting our future state. Am I going to be safe or not safe? Is this going to feel good or bad? Is it going to feel really good or really bad? And in what forms is it going to feel good or bad? And the brain's job is to do that to what? Keep us safe. So once you get that concept or principle and start to understand your own decision-making within it, you become conscious of these different fears of future regrets. And once you become conscious, they lose some of their power, sometimes all of their power, sometimes to control what we do. If that makes sense. That was long, but that's the nut of it. I've told you everything.
It makes perfect sense. No,
I absolutely
no. There's got to be more. We're only 15 minutes in. I love it too. So something I struggled with too is, okay, for Bobby, who knows me well, you don't know me very well. I'm a fifth child of 7 children. I'm kind of a blowhard, loudmouth who likes my whole life to try to show people I'm smart. Huge weakness of mine. The trading
here I am, family, down here as the 5th child. I'm down here. Somebody pay attention to me.
Exactly.
I'm here. There's all the rest of you, but I'm here too.
Yes. So you get it. Exactly. So this is something when I trade, because I want to think of myself as the smart person that I often portray myself as. And when I lose money, I feel like an idiot. That's exactly what you're saying, right? It's the same kind of thing, isn't it?
It is. And as the 5th child, it's going to be a bigger deal for you, not only because, like, is anybody going to notice you in the shuffle, but like you had 4 older brothers and sisters. So you're, 0 to 10, there were 4 people right there who knew more than you just by the fact that they were 2, 4, 6, 8 years older than you, whatever. So like the youngest child or a younger child with, 2, 3, 4 older brothers and sisters is always going to kind of have this, like, do I know enough? Well, wait a minute, I am as smart as you. You just think of the child's experience,
Right.
You were always like, they knew until you were like well into adulthood, they all knew more than you just by virtue of being older. So your whole thing is like, wait a minute, do I know? Do you realize I know? Do I know? Which, by the way, so I have a background in the neuroscience of psychoanalysis. Like, I wrote a master's paper at the University of Chicago, not because I'm so smart, but because I was interested in it. It was years later that an academic journal wanted to publish that. It was 2003. And that's when I found out you had to have a motion to make a decision. And I was like, whoa, that changes everything. I started talking about the psychology of trading because I was so fascinated with it. I wasn't expecting to use that psychoanalytic background. I wasn't expecting that part of, like, we grow up with a self-image and that self-image plays itself out. I wasn't expecting it. And then I got this client who was an off-the-floor trader at the Board of Trade who said, every morning I lose like $10,000. And then most days I make it back and make like $10,000. Like, what the heck is going on? And out of sheer, like, I had no idea what to say. I said, well, what's your life story? Well, I was born to a 16-year-old runaway and we were on welfare. And then the running coach adopted me in second grade, like virtually adopted me, took me under his wing. And I'm like, I don't know, could you be repeating your life story like in sort of every day's trading? It literally stopped. He never did that again.
Wow.
Now, it usually doesn't work like but I was like, whoa, that whole lessons we learn while you're growing up, which is the essence of psychoanalysis.
I want to
matters.
When we're done here, I want to try and put together a package of getting you on once a quarter or something, because I'm already blown away by this kind of stuff. First of all, the thing you just said about Jimmy being 5th of 7 and looking up at his brothers. Are you taller than any of your brothers, Jimmy?
I'm taller than all my brothers. We're going to fight someday.
Well,
now
we're all the exact same height.
No, the two of us have this thing. We really do dislike each other. But I also see it in my sister's kids, where the youngest one, so she's got a 21-year-old, a 19-year-old, and then like a 15-year-old, 16-year-old. And the youngest is starting to get to the point where she understands them and what they're doing and where they're going, but she's still kind of an annoyance to the little one. And she is always trying harder than everybody else. She's the best athlete of the three. She goes the far. She's playing on varsity as a sophomore in basketball in high school. And, she's like, Dad, look, I'm playing 3 sports at once. It's all this attention thing, different than Jimmy's, but similar, right? Sort of in that same look at me kind of way. So, okay, so I actually do have a question, but go ahead.
Okay. I was just going to say, you can't actually see this because of my cameras, but that's the cover of a, sadly, New York Times article about Lindsay Jacobellis, who's a snowboard racer, and she won all the medals and stuff. She has a crazy story, but net, she had a brother who was 5 years older than her. Just the two of them. All she ever tried to do growing up was keep up with her older brother. Boy, he's 5 years older. Ask why she's the fastest snowboard cross racer in the world.
Yeah.
Because she spent her entire childhood trying to keep up with her brother and his friends.
We have a friend like that named Emma Moolman, Jimmy. That is the exact same way. Anyway, my question is, so the first time I started trading for myself, I tell the story all the time. I lost just short of 6 figures, well into 5 figures in under 9 months. First time I tried to trade for myself. And I said, okay, shit, I don't know what I'm doing. But I realized in retrospect that I was right and the market was wrong. And that's how I lost that money so fast, right? I was just always thought the market was wrong and it was going to go my way because I'm so smart. So I developed these little things that worked for me, and I try to translate them to people. And maybe you can help me say sort of what's behind this. The first one was, I don't look at dollars in my P&L anymore. I look at percentages, always. So I have a spreadsheet where the live prices are fed in from my platform to my spreadsheet, and there's no dollars on the spreadsheet, long or short. Okay, I'm up 1%. I'm down 0.5%, not so bad. I'm only down 2%. I can stomach that. What's the structure of that? Like, why did that work for me? And is that the kind of thing that could work for other people?
Well, the dollars had more meaning. Like, different people assign, different levels of importance to different amounts of money. Like my dad had nothing as a child, so any amount of money was always a big deal. Even after he invested, and literally had $1 million in stock, it's still like $20 was just such a big deal. And I find that, it depends on your background, like what the number is. I have a friend here whose husband sold a dental practice, and I know they have double digit 7 figures. And we were at a party and she had a blouse on and we complimented her. She was like, I wasn't sure I should buy it. It was $18. And I was like, what? So someone else may or may not react. Like, I have some clients who run really, really big portfolios and there's lots of zeros and they just don't. But when you translate it to 1% or 1.5%, it doesn't have the meaning. Like, I was always told to do that and always thought it was a good idea. I couldn't do it, because I still wanted to know. And I think that's because of my dad being so meticulous, about every little penny. But generally, you kind of took out the sting of it. And I think if anyone can do it and live with it, it's generally, I think it's helpful. But you change the meaning. It created, back to when you saw you were down 1%, it didn't make you predict that you were going to be in a really bad state in the future.
Right.
But, depending on what 1% meant, that seemed like so much money, even if it wasn't, based on your training, that dollar figure was like, whoa, Bobby, that's dangerous.
Yeah. So here's where I think you're going to diagnose me as potentially being neurotic and having OCD or something. So that was the second thing I did. The first thing I did was I made myself real world break even. And I tell this story all the time. I think this audience has heard it. When I got back to trading, I started relating the risk I was taking to something that I could give up in the real world to make myself real world break even. So Jimmy remembers a sandwich shop on Wacker Drive called Mangino's across the street from the CME group, and a lunch there with the double meat, which is what I always got, was always around $12, $13. And I remember the first time I took a trade after blowing up as spectacularly as I did, I said to myself, okay, this is like $130 of risk here. That's it. So if I lose on this one, I need to bring lunch from home for 10 days, 10 straight work days. And that worked for a little while, except 10 cans of tuna in water just sucks. So
not true. I love tuna.
And at some point, you're not able.
10 days in a row.
Yeah, 10 days in a row. So 10 working days, because obviously I wouldn't make myself eat those at home. So then I had to transition because there becomes a time where, and this is more of a statement, Jimmy, than a question, and Denise, there comes a time where you can't make yourself real world break even for like $2,000. So I said, okay, $2,000 bothers me, even though it shouldn't. So the percentage was, I'm not hiding from it when I do that, right?
Well, I don't know, maybe, but in a good way. Like you're not in denial. It's not like 2% isn't true. You're not lopping off a zero or anything. It's actually true. I think we just lost Jim, maybe.
I'll be back. There he is.
Real world break even meant like I lost $130 here, so I'm going to save $130 over the week.
Yeah.
And then it made you feel safer. I mean, if we were working together, I would delve into like what amounts were safe or unsafe for what reasons, like realistically and in your imagination.
At the time, rent, but go ahead.
So there was some realism to it.
Yeah, there was. I mean, I feel like honestly at the time, and I don't want to make this a one-on-one session, because I don't want you to go too deep in here. But
and then she's going to have to bill you and everything.
Not only that, but I think they're going to kick me off the show. No, at the time it was, I just wanted to go back to trading so bad. Probably didn't have the money, to be honest.
Now, did you trade for someone else before? Because you said once you went on your own, you had this losing streak. So I was curious what happened before that.
So there was a way, like Jim and I both worked for firms. Jimmy still does. And I was able to trade outside of the pit that I was covering. Right. So if I was in the interest rate pit, I could trade yen and vice versa. So that's the allotment they gave us. So I still had a job, but I had lost like all of my own money and some of my dad's. And most of my own money was my wife's, who's now my ex-wife. I don't know if that's the reason. Could be. So,
I mean, I started out upstairs across from the SIBO in 94. And I already had the background in the neurobiology and the psychoanalysis. But fairly early on, and then I went at that firm, I was a prop firm, I put up money, I was getting capital from them. Then I went to Schoenfeld, where I didn't have to put up any money, they staked us. I noticed like some people did better with their own money and some people did worse with their own money. Now, I've never really had the opportunity to like analyze that in aggregate, but I definitely noticed that. Like, I was sort of okay losing my own money. I was less okay losing Schoenfeld's money, even though Schoenfeld didn't care. I mean, they expected me to lose money, like I remember they used to like, they'd give you 100 shares to trade, then 300, then 500, then 1,000. And they go like, every time we raise your shares, you're going to lose money for 3 weeks. I'd be like, if I lost money for 3 weeks, I wouldn't be able to cope with it. Yeah. Like they didn't care.
Yeah.
But anyway, different people, for reasons I can't exactly explain, I could if we really decide to study it, but they just feel better about losing their own or not losing their own, like levels of responsive. I don't know.
I don't think I answered your question. In this particular situation, it was my own money. It was always our own money when we were working at firms.
Well, but you said when you went out on your own.
When he left his job.
When I left my job and first went out on my own, I was actually part of a prop group that a fund of funds. Yeah.
Right.
Exclusively. Yeah. So that's all I trade now is my own money and a couple of family members. But now I don't have an issue with it.
So I have this client, I tweeted about him today. He runs a firm in London. He's very quantitative. He's got a PhD in stuff. That was my point. This morning he said, you explain this to me. I get it. I've been applying it. It's great. Now what else do I do? And in that, I reminded him that the basic question is, what am I feeling and why? Which is a relatively easy question to say, right? And relatively easy for people to comprehend. It's way harder to actually answer accurately. But that's the skill. Like this whole subjective data set that comes in terms of feelings and emotions that everybody says get rid of, which by the way is a logical fallacy. You can feel anything you want. It's what you do that either makes or lose money. It's not what you feel. I used to be very confused by that. Sitting in that first prop firm, there was this guy who was ex-SIBO who'd jump up and down screaming all the time like crazy. He made the most money in the office. And I'd be like, take the emotion out of it, but Steve is wildly emotional. Like he was jumping up and down, but he wasn't trading those feelings. The thing is control the actions, but it's way easier to control the actions once you know what you're feeling and why, and you can assign the feelings like that's an intuitive feeling about what the market's going to do. And that's a feeling about I want to be seen or I don't want to look stupid or any feeling about yourself. We just learn to navigate that better.
So I think I know what your answer to this question is going to be. A couple of years ago, the CME, who Bobby and I do a lot of work for, they launched their whole suite of the micro contracts, really tiny contracts. And if you're an equity trader too, I mean, you can trade single shares, whatever. And what I always try to tell the younger people, and I think you would agree with this, trade tiny amounts just for a long time, and go with your percentages or whatever you want. And perhaps you're not going to be making enough to eat filet mignon, but just to be able to master the emotional side of it and learn about yourself and how you can handle curveballs as they're thrown at you. You'd 100% back that up, right?
Yeah. I mean, I mean, that was Schoenfeld's approach, but it's like anything, I left Chicago for New York and then left New York for a ski town. And so I often liken it to skiing harder and harder slopes. Like, you have to get comfortable doing the next harder thing a little bit at a time. So, and to use an example, I mean, this was way, 1995 and 96, but this guy, Dmitry Balyazny, who now runs a hedge fund called Balyazny Asset Management that's got who knows how many billions of dollars. Yeah. I sat next to him back then, and he traded 300 shares for a long time. I don't know exactly how long, but I think it was measured in years. And he said, look, if I can learn to scale in and out of a trade with 300 shares, then I'll be able to do it with any amount of shares. Buy 100, sell 100, buy 200, sell 100, sell all 300, sell one short. He just, till he was satisfied that he knew that. Third of a position, third of a position, third of a position. And then one day he goes, okay, give me whatever. Like, he just leaned into that to an extent I wouldn't have been able to do, but somehow he understood that he could develop this really unshakable confidence.
So this is
in a style.
Right. So would you say, Dimitri, you sat next to Dimitri, and we know of him. I know some people who know him quite well and work for him. Was he, because sometimes I wonder with these guys who start hedge funds and get all this capital, right time, right place, or is he the right guy? Was he something special, which you just thought he had such a process and such a command of things? Could you have predicted that he would have exploded the way that he did?
I don't know. I'm trying to put myself back in that room. It was in the AT&T building, so there were all these prop rooms over by the SIBO, and then you guys were over here, and then it was in the AT&T building, kind of halfway in between.
I know it. Yeah,
this beautiful office, because it was Schoenfeld, and he liked having the big, beautiful office.
What's his name? Marty Schoenfeld, is that his name? What's his first name?
No, Steve Schoenfeld.
Okay, yeah, right, yeah.
His genius was self-clearing, but that's a whole other story. Yeah. So he charged us a penny, but he was really only paying like a quarter of a penny, and there was a big difference in that, times millions and millions of shares.
Trading.
I mean, he made it clear, because basically the payout deal was like, if you were profitable on the month, then at the end of the month you got your profit plus a percentage of your commission back. And I was like, the only way that can be true is if the penny he's charging me is not the penny he's paying. And so anyway, Dimitri was already at the head of the desk, even though he was only trading 300 shares.
Interesting.
So he was already known to be talented by the time I met him. He was very, very, very quiet. Here's the thing he did that I always thought was amazing. I mean, Schoenfeld didn't want us to trade during the middle of the day, because they said, like, the volatility is crap. You'll just get chopped up. He would lie down on the floor and read a book starting at 11 o'clock Chicago time, and not go back to the screen till 1:30.
Wow.
So I started walking. I belonged to the sock club at the time. I'd go work out, take a shower, like redo my makeup, like take a nap maybe, and go back in the afternoon. And it was a completely different day, no matter what my P&L was from the morning. I mean, he was well respected at that point already, and Schoenfeld backed him originally. So, I mean, he was just like one of his top traders, and then Schoenfeld offered to give him some money. So, but I predicted it. I guess not, because maybe if I would have predicted it, I wouldn't have taken the job to run a trading desk in New York. I would have said, if I stay here, maybe I'll just work with
hook your wagon, hitched up to him. Right, exactly.
Instead,
I go to the Sock Club still, by the way. Now it's called the Buckingham, but I went to it back then. I bet we ran into each other more than
we
once.
Probably did. I loved it. I loved Chicago. I loved that place. I loved Chicago. I never thought I was going to leave. And then
say it loud, Denise. Bob hates Chicago right now after he left. It's so easy and convenient to leave and then say how awful it is. I'm still there and I love it. But anyway, continue, please.
What if I left because it was awful? But go ahead.
Where are you now?
I'm Southwest Florida.
Oh, one of those guys.
Yeah.
I wasn't planning on leaving, but like I randomly, there used to be a firm called Bright Trading. They were a fairly big prop firm. But anyway, they asked me to go run their New York desk. And I thought, I could go to New York City for 2 or 3 years. I'm from Ohio. I'm a Midwest girl. That'd be sort of interesting. 24 years later.
Oh, gosh. Right. That's what my daughter's moving to Boston in the fall. And she's going, it's a 3-year program. And I was like, bullshit, it's a 3-year program. How many 3-year programs have we seen grow into a lifetime? And, you know, you'll be coming back once a year to visit your parents. I hate that, by the way. And I hate Boston because of it. It's taking my daughter away. What if you met someone now who was Dimitri before he started? So what would the key pieces of advice you'd give a young trader? We already talked about position sizing. We talked about trying to control your emotions. Is there something else that we're missing or no?
Well, the first is understand what the game really is. Like, the game is not whatever form of analysis you have. And there's, you know, zillions of forms of analysis and zillions of ways to play the game, right? So understand what the game is, which is really about predicting where other people are going to take the market given an unfolding set of circumstances. There's brain research that shows the better you're predicting people, the better you trade. Like, so you got to understand it's that. Like, I have some hedge fund analysts who, I literally had one ask me last week, would someone tell me what the real game is here? Because the number on the spreadsheet ain't the game. And I'm like, right. So I told them, like, how about you start with like reminiscences of a stock operator and understand like relative strength, and is things trading the way it shouldn't be trading? But that's like, if something's trading the way it shouldn't be trading, given what you know, there's somebody who knows something else, you know? So understand the game, understand how the game makes sense to you. Like, I'm a momentum trader because I learned that. Well, I left the first firm to go to the second firm because momentum made more sense to me. My husband's, you know, an econometrics graduate student from Duke, like, hedged options make sense to him. And I'm like, why hedge it? And why does it have to happen in a certain period of time?
Let it roll, baby.
Yeah. We have a story about GameStop. And when GameStop was running the first time around, I'm like, buy some puts. He's like, well, how should we hedge them? I'm like, we shouldn't. He's like, but I'm like, buy the damn puts. I don't know. GameStop was like 325 when we bought him back at 85. Anyway, that's my classic Bill versus Denise story. So understand the game, understand how it makes sense to you, and understand there's a zillion ways to do it. Like, and then work with that so that you start to learn not only whatever your method of analysis is, but the confidence that drops out of it. And back to your point about do it little by little by little, that's about developing a feeling that you know what's going on. And then learn to analyze your different degrees of confidence so that you can ultimately say to yourself, is this feeling about what I know about the market, or is it just about what's going to happen to me? Now, those are all easy things for me to say. They're not necessarily easy things to do, but if it were easy, we wouldn't be having this conversation. But they're doable. And actually, in contrast to what everyone says, that like trading's not for everybody and it's so hard and so few people can do it, the truth is there's a fair amount of research that say people who know nothing about the market can predict short-term price action. It's because they see the lines on the chart and they get a feeling about like where that line should go next, because it is a reflection of human behavior and we are all good at like interpreting that. Then you start, you go from know nothing, being able to predict the line, to you start to learn stuff, and then like everything gets messed up for a while. Yeah. I think that
funny.
answers the question.
There's a ski analogy. And one of the ways I was taught technical analysis, which is funny that I think you'd appreciate it too. A guy by the name of Joe Hogg, and this is 30 years ago, and he's real into technical analysis. And he said, it doesn't work per se, but picture this. He said, if you watch if you're a huge fan of skiing, and there's one particular skier who you love, and you are watching him do a run, you can't predict exactly what course he's going to take, but you have a body of knowledge of him that leads you to, oh, he's going to go there and he's going to try to cut that, et cetera, and try to take this particular path. And I always kind of like that analogy too, because technical analysis doesn't work per se. It is a guidebook. And so oftentimes it's wrong. And even if it's wrong 50% of the time, if it's right 50% of the time and you make more money on those, bingo, you're in the chips. But I always thought that was an interesting analogy. And perhaps you being a skier, where do you live, in Utah or Colorado?
Utah now. I lived in Idaho first. But...
Oh, Idaho. I remember now. Yeah, I have a place out in Tabernash, Colorado, and I do love to ski, but I like to hike a little bit more. I'm a fan of the summers a little bit more than the winters. But anyway, do you like that analogy or no?
I do. I mean, it's kind of skate where the puck is going, right?
Yeah,
Like,
right, exactly. Yeah.
Um,
Which is something they say on CNBC like 3 times a day, which I can't
well,
I can't handle that. Yeah.
we could go, yeah. Well, the worst part about that is they don't actually know what it means.
They don't have no idea what it means.
Like it's just a thing they've heard.
They're the worst. They're the absolute worst.
The human brain is always predicting. Like anybody who says stop predicting, like give it up. You can't stop the human. Like that's the fundamental mechanism of perception is a prediction based on your past experience, all of your past experience. But in anything you're learning, what you're doing is creating past experience that you then can predict from. So the little by little trades is you're creating, okay, I was successful. Dimitri with his 300 shares. Okay, I can do this. I can scale in and scale out in thirds. So it doesn't matter. Give me 30,000 or 300,000. I can still scale in and out in thirds because he knew that was his genius. He knew to develop that feeling. How he knew that, I don't know. Can't remember what else I was going to say about that.
But that's really the takeaway from this. If someone's watching this, a young trader's watching this show, I think the most important thing is what we've kind of all three hit upon. And I'm not trying to wrap it. I still have a couple more questions for you. Or hopefully I'm going to pass it with Bobby. But learn about yourself, and you do that. It's hard to learn about yourself when you're down 95 grand, like Bobby was when he started out. It's much easier to learn about yourself when you're down $200, and how you react to being stupid in that moment, or how you react to being a genius. And that's one thing we always joke about too. If I have 3 winning trades in a row, I'm never going to have another losing trade ever in my entire life. And it's always the 4th one then that I double up the size, triple up the size, and bam. So as soon as you start to really master that sort of thinking, the door is open to success a lot wider. You know what I mean?
Yeah, I mean, I will say that I learned from the modern psychoanalysts, which are a little different than Freudian, but like put the feeling into words. So, I use OneNote, and I've always used OneNote. Like, just let it rip what you're really thinking and be honest. Like, oh my God, I've got this now. I've figured this out. I'm never going to lose money. I used to
never, ever.
I used to be fairly good at trading the Fed announcement, basically because Ben, I can't think of his last name right now, stood above the S&P pit and called it. So I would hear it slightly faster than I'd see it on my screen. And I did that a couple times, like totally killed it, in the Fed announcement. And I wrote in a chat to a trader friend. This is when I first learning to put it into words, like, oh my God, I'm a genius. Can you believe I blah, 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 blah. He didn't know what I was doing. I was just doing it to get that feeling out.
Sure.
So that I didn't then act on it and take the 4th stupid trade that lost me all the money I made. I did the exact opposite one time. I live in Greenwich, Connecticut. I lost a bunch on the Fed out of overconfidence. I went for a run, think, okay, I got to just stop for today. Like, I can't, I'm too messed up. I went for a run. I got it out. I came back and made it all back in the last 30 minutes. But it was because I felt the feelings, put the feelings into words. That day it was, I'm an idiot and all of that. I'm going to say this. There's all kinds of advice out there that if you think something or you say something, a feeling, it makes it more true. No, it's wrong. Like, allow yourself to have all your thoughts and feelings with no judgment, and then just sit with them and go, what's what? Like, every time you judge a thought or feeling, you actually just raise the chance that you act out that feeling. Like, if you just let thoughts and feelings sort of come through, like, this is what it is, or ultimately try to figure out why you feel that way. But at first it's just like, they're just thoughts and feelings. They're like electrons in your head, with a little bit of chemistry thrown in. Like, they'll come and go. They don't mean anything. A thought doesn't create a feeling. None of it creates reality. And your best friend is really your so-called negative feelings. Like, every feeling that's unpleasant, fear, frustration, disappointment, anger, you name it, is actually meant to get your attention to something that needs fixed. You need to learn. Like, now, they'll be distorted and exaggerated based on your past experience, but at their core, like, okay, I'm afraid of an ungrooved double black slope with flat light where I can't see a single thing, and I know there's 4 feet of power, which is actually the situation I was in like 3 weeks ago today. Well, for a darn good reason. I can't see anything, and there's nobody else out here. Like, that fear has a purpose. Frustration has a purpose. Something's not going right. What is it? Disappointment has a purpose. Like, that didn't work out. I feel bad. Okay, why didn't it work out? What could I have done differently? So all those feelings get this really bad name, but what people don't know is you can just feel them and then try to analyze them. And first of all, they don't bother you as much. And second of all, you learn something.
So I think I hear you saying, and I want you to correct me if I'm wrong, because this is one question. Then I have another one that I think will be more fun. You're saying that, so for every trading educator, I spent a brief 4 years as a trading educator. I loved the people, hated the people who ran the company. And every single time they're like, you got to do a trading psychology session. Like, okay. I mean, no, all I have is what I know, which is not psychologically based. It's just what worked for me. But what I'm hearing you saying, I used to say to people all the time, think of your emotions like Michael Jordan. You can't stop them. You can only learn to control them. Like, you can only accept the 40 points that Michael Jordan is going to score and try and control everything else. And what I think I hear you saying is you're not going to get rid of the emotions, right? You just have to understand them better.
Well, the best way to get rid of them is to understand them as data, and then to understand the data. Mm-hmm. Have the courage to like feel them and describe what they are and where they're coming from, and get better at like going, okay, that really is a feeling. Because the other, like a lot of feelings will be about yourself and are you going to be safe or not? Those are the feelings that you don't want to act out. But buried in there is a feeling about what the market's going to do, like true intuition, unconscious pattern recognition. The only way you hear that legitimately is if you set the others on a shelf. But setting them on a shelf only happens if you're like willing to like feel them and look at them and go, okay. And then they just lose because they're trying to get your attention, like Jim and, you know, trying to get his brothers and sisters' attention. Like they'll keep trying to get your attention if you don't listen to them. If you just listen to them and go, what is this really about? You often realize something and they calm down. Like their voices, you know, if someone had paid attention to Jim, he would have shut up.
They didn't, and I didn't.
Right.
He still doesn't. So I just got one more question. This will be my last question. During that sort of 4-year period where I was a trading educator, every female I ever taught was better than the males. So number one, I've seen data on this, and it seems to be true, although I haven't pursued the data because I don't want it to be true. Is there a reason, sort of a psychological gender-based reason for that you're aware of?
I think so.
If it's true.
I don't know that research has been done on this, but when I say it, you're going to say it makes sense. I mean, brain research has shown that this theory of mind, I have a theory of your mind, I'm predicting how the other person is going to react, is like the thing of great trading. Like that's the core skill. Women are probably, everybody has it, but given women's, you know, propensity to give birth and raise children, we probably have more natural theory of mind because it's our job to pay attention to that baby. Forgive me for anybody who's getting offended by this, but that's the truth.
Oh, we don't care about that.
People
are going to get offended.
Well, I know, but I mean, like somebody out there probably, you know,
they
like
go to hell. Yeah, we're trying to get real answers here. Yeah.
Also, then women are not taught that they have to ignore and suppress their emotions as much as men are. So first of all, they're going to do the people prediction thing better, most likely. And second of all, they're going to be able to hear their intuition because they're not so afraid of all of the other feelings because they didn't spend a whole life with people telling them to rub dirt in it or, you know, get over it or don't feel
Walk it off. Yeah.
Yeah. So I think some of the detail of the research is that women don't get involved in fear of missing out as much. They won't take a trade because the other guy did. And men will do that more often. So that the sort of competitive male against male thing. And women are very competitive in a different way. Just they don't apply it to their P&L. So theory of mind, predicting other people, not afraid of their emotions is data, and probably don't get as caught up in is what's my P&L versus someone else's P&L.
That's fascinating because, and I agree with that 100%. I do think there's the power of men like to be competitive and crazy sometimes manifests itself in positive outcomes, but oftentimes does not, obviously. But so I genuinely believe what you guys are saying, that women would make better traders because of those things. And obviously women, there is research on this, make better investors because men can be reactionary and have like women are more loyal in their positioning, it seems like, and women tend to get better because, like Charlie Munger says, most of investing is just waiting, right?
Right.
Yeah. So this has been great. I agree with Bobby. I'd like to come on frequently and just do a trading psychology. I feel like I should send you a check that I owe you money for a private session. You're like, no, I'm not gonna, just to be clear.
She's not saying no to that. She didn't say no.
I liked your eyes.
It's okay.
No, but thank you so much for being here. And you guys who are watching, I hope you got as much out of this as we did, because I really loved it too. And I wanted to thank you guys. The two shows that Bobby and I do, this one and then the Futures Edge as well, is nothing without the support of you guys. Remember why we did it. We both were with mainstream media for a long time. We both were bounced out of that arena because we had the propensity to give our real opinions and not opinions of sponsors or opinions they wanted to be told that day. But it's nothing without your support. Thanks. Please retweet this when you see it. Please DM us with any questions or feedback. Thank you so much. This has been the Tradiers, the Trader's Edge.
All opinions expressed by Tradier Hub contributors are solely the contributors' opinions and do not reflect the opinions of Tradier nor its affiliates and or subsidiaries. You should not treat any opinion expressed by Hub contributors as a specific inducement to make a particular investment or to follow a particular strategy, but only as an expression of their opinion. The contributors' opinions are based on their own personal research, but neither Tradier nor its affiliates and or subsidiaries warrants its completeness or accuracy, and it should not be relied upon as such. Any trades or positions discussed or referred to by contributors may or may not be actual live trades or positions. Such information is not intended to be financial or investment advice. Tradier Inc. is the parent company of Tradier Brokerage Inc. Tradier Brokerage Inc. and Tradier Inc. are separate entities with their own products and services. Securities products and services are offered through Tradier Brokerage Inc. Tradier Brokerage Inc. is an independent subsidiary of Tradier Inc. All rights reserved. Member FINRA SIPC.